bulletproof the position, but I might have been in the same situation with an unlimited upside profit. I think I would have been risking 20 to 30 cents on the position if I applied income method number 4 at this time.
Right. Okay. So now this call expired worthless, and you're left with a almost bulletproof position. Let's go to the next slide here. What happens with these with this setup? Okay, the income methods reduce the gap. We start off on the left there with a gap. Go ahead and click the dealie, and we should get a dotted line. Okay, and that's the original. But then by doing an income method, we reduce that gap. Okay, and then next screen. Once we reduce that gap enough, okay, you can actually reduce that gap to less than 0 by repeated or sometimes even just a single income method. You start out with a small gap. Go ahead and click it, and continue to reduce it by way of the income methods, and you're going to end up with, look at that, Mike, we've got unlimited upside potential, and the floor is above break even. So what do we call that situation?
Well, that's bulletproof, Kurt. We have an unlimited upside, and we can't lose any money on the downside.
Right. Unlimited upside, can't lose any money. Okay. Now, Mike, is this a good place to exit to your slides so we can also show income method 4?
I think so, because I also want to show something else. It's I forgot to mention something to you when I sent the slides over. The call didn't expire. I actually bought it back for 3 cents on August 20th.
Well. So you ended up with a nickel risk.
That's right. That's right. But I'll show that as well.
Okay, very good. Mike, right now I'm running a poll. I just wanted to ask a question of our folks that are on the line. If they're happy with their trading results for the last 12 months. And then, Mike, I'm going to have an immediate follow-up of that question. These are actually leftovers from the last presentation that we did. Okay, I'm going to have some new ones pretty soon, some new questions. But I think it's still profitable to do this interaction with these particular questions. I think it's going to be profitable to our audience. Because I'm using the Socratic method, I'm going to teach by way of asking questions. So we'll give it another few seconds, and I think I'll close her 3, 2, if you haven't got your vote in, do it now, 1. Okay. Mike, we've actually got a pretty high instance of folks that are happy with their trading results. That's marvelous. It's still not high enough for me, but that's high. We've seen it in the teens. We've even seen it in the single digits. We've even seen it 0, where we've had nobody happy, right?
Yes, and there's something that goes along with that, and you unfortunately didn't get to see it, and I didn't get a chance to review it with you. Our first poll, we had 48% of our attendees doing the free materials, 23% thinking about buying the blueprint, and 50% currently own the blueprint. And that was when we first started the presentation. Yeah, that's when we first started the presentation, the first 2 minutes before you logged on, when I think we only had 40 to 50 attendees, and now we're up to 100 plus.
Right. Okay. So we had 50 then. We've got 111 right now on the line. Actually, I think you and I count, so it's 109. So we have 109 folks on the line, and when we had 50% of them said that they had the blueprint.
That's right.
Kind of suspicious, isn't it? Okay. All right. Well, let's go ahead and hide the results there. Here's what I'm going to do. I'm going to ask if you could keep your wins from last year, but all your losses you were able to reduce by one way or another. I mean, if you were to use a time machine and go back, and you couldn't not make a bad decision, but you could just turn a losing trade into a trade that only lost 6%. Okay. What if? Would you have answered differently? Would you have said, yes, I'm happy with my trading results now? Or still said no, but been closer to yes? Or would you have still said no? If you happen to be in the no category before, would you still say no? If you're in the yes category before, would you still say yes? You know, we got to make sure and clarify that.
Got it.
All right. Let me slide this out of the way so I can see what's going on. There we go. Oh, my goodness. That's something else. I'll leave this up for just a few more minutes because I want to get as close to 100% participation as possible. Leave it for another 10 seconds. Mike, this is dramatic. It's dramatic. Let me go ahead and close that poll. Whoops. How do I do it? Close that poll and share the results.
Mm-hmm.
Mike, 75% would be happy with their trading results. That's 3 times as many, right?
Yes, it is. Absolutely.
And 13 would have said, still said no, but been closer to yes, and that leaves only 12% that would have still said no. Now, I'm going to say that if they would have still said no, Mike, then that means that they lost less than 6% on their trades, right?
Mm-hmm.
So if you're losing 5% or less and still you're not happy, I think you might be losing it too often, and that's also a factor. You might be staying in trades and nickel and diming yourself, not staying in trades long enough to see them mature. And so that's also a really good principle that we're going to have to articulate in one of these webinars, Mike. Not just managing the losses, but managing the frequency. Okay? Because if you have 5% losses in a row, it's suspiciously like losing 50%. Mm-hmm. You know what I'm saying? All right. Okay, so but in all, 88%, okay, 75 plus 13 would have been better off. Okay, I'm going to ask how much better off. Okay, and then we'll launch into income method 4 with Silver Wheaton, and then we'll make our offer. Okay.
Mm-hmm.
All right. Mike, just a little side story. I was in Colorado Springs in June doing a seminar, a live seminar with the options trading group there in Colorado Springs. And one fellow raised his hand. He says, try $30,000. And I said, sir, if you had managed your risk down to 6%, you would have saved or made, you would have had $30,000 more to your bottom line last year? He says, well, no, that's just one trade. He was talking about his worst trade of the year. He would have saved $30,000 if he'd only been following the risk limiting principles in the blueprint. Okay, Mike, whoops, yep. Okay, 3% didn't get it. They said, I don't see how that would help at all. 12% would have saved $300, and I chose that $300 figure for a reason. Let's see. 18% would be ahead by $1,000 to nearly $5,000 in the lion's share, Mike. 65% would have saved or made $5,000 or more. Another 3% see the possibilities here, Mike, of being able to have very small losses and have your capital left to buy at the bottom.
Mm-hmm.
For example, I was managing for a friend. I was managing $350,000 of his money, and he had about the same amount in mutual funds. In November 2008, he had lost more than 40% in his mutual funds. Guess how much I lost him, Mike?
Probably around 3.5%, 4%, maybe 5%.
It was about 3.9%.
Mm-hmm.
Okay. Now, if you lose 3.9% in one of the worst bear market drops, that means you have 96.1% of your capital left.
That's right.
And you can buy stuff with that, okay, and buy it on a bargain. Okay, and so 3%, I recognize that, but 65% would have saved or made $5,000 or more. Mike, what we've shown today, we've shown the value of limited risk trading, haven't we?
Mm-hmm.
Okay. Well, Mike, let's go ahead and take a look at your Silver Wheaton example. Now, you had done this.
And I just wanted to review and go back to where we were.
Shared.
Right. Just wanted to review where we were.